When you are a Canadian incorporated business owner, you want to make sure that you are filing on time, and here is why. First, you want to avoid fines, interest, penalties. All of these can really add up, and it is all cash that you are taking out of your business that you can be investing within your business. You want to mitigate the risk of those penalties, because if you have a balance owing, penalties can be anywhere from 5% on the unpaid balance plus an additional 1% for up to 12 months until the balance is paid. If you are a habitual late filer and late in making payments, your rate actually doubles from 5% to 10%. And of course, depending on the size of your business and potential tax owing, these can be sizable fines to have to pay. And again, we want to make sure that we're keeping as much cash within the business and avoiding penalties and interest at all possible costs. And then lastly, one of the most important items that makes it really important to file your T2 on time is that it leads to the preservation of certain tax credits and refunds. And what that means is that if you file your T2 late, you could be disqualifying yourself from having access to other credits. For example, the scientific research and experimental development tax credit, which is one of the most highly sought after incentives in Canada. But if you are filing late, you're going to put having access to that credit at risk. And that's the last thing that you want to do, because that one in itself can be a very sizable non-refundable credit or refundable tax credit that could lead to cash in hand, again, to reinvest within your business. So filing late, save your money, avoid penalties and interest, and make sure that you have continued access to all the credits and benefits that the corporation is eligible for.